we shall see.
The big news today, though, Chris, is the central bank has announced the changes that it's making to the lending rules, and you were down at the press conference earlier.
Yeah, I was just across the road at the central bank, and Philip Lane, the governor, announcing the changes in the deposit rules. This, what happens today really isn't in a vacuum. The big news is 10% for first-time buyers. No 220,000 anymore. Forget that. It's 10% for the value of a property. That is the deposit you'll need. For some first-time buyers who are nearly there, that'll get them over the line. For some people that were looking at, I don't know, saving 40,000 for a 20% deposit, they now have to get 20,000. So they will get there sooner in terms of the deposit. This starts in January. But the problem is, will there have moved? Will the price of the house that would have been, the 40,000 deposit, will the price of the house have gone up? But the point is, you can't just look at what's happened today. You have to look at what happened on budget day as well, with the Help to Buy announcement and the tax back of a maximum of 20,000. Some tinkering of that since the budget. But the point is, the deposit is a lot less in January than it would have been in September. And the central bank governor has been quite defensive under questioning. Just at the press conference I was at, asked if he'd bowed to political pressure on this. And Philip Lane was making the point that the only way we will know, the point of all of this is that we don't go down the road of rack and ruin again. So you can still only borrow 3.5 times your salary, your household's income, your gross income. And he also made the point that what they found, somewhat to my surprise when he said this, was that first-time buyers had actually been over-providing in their deposits anyway. 73% of first-time buyers had been building more than they need. So like the reverse of speed limits on the road, when you see 80 on the road, that doesn't mean you have to hit 80. That's the maximum you have to hit. The reverse of that, 10% deposit is the minimum you need. And the governor was saying lots of people have it in their head that the more deposit, the less mortgage, the less lending. So that's where he took it today. The Taoiseach's happy. The Minister of Finance indicated to us before this was announced that he would be happy with what was announced. So in studio with us now to discuss this a little bit more, particularly on what it's going to mean for house prices, is John McCarthy. And John, you've been doing some very, very interesting sums, and I was telling Sean Moncrief about it about 15 minutes ago. Just talk to us about an apartment or a house that was valued at €250,000 in September.
Indeed, Chris, we just did a little worked example. So we took a new home of €250,000 and we said, what would the situation be pre-budget compared with the situation that will pertain in the new year when these relaxations in the mortgage lending rules kick in? And two things have happened. As you correctly say, it has to be taken in the context of the Help to Buy scheme, which was introduced on budget day as well. So we're looking at the combined effect of Help to Buy and the relaxation in the mortgage rules. And I think what it amounts to is that if you're buying a new home as a first-time buyer, previously you would have had to assemble a deposit of about €28,000 to let you buy that property. From the 1st of January, you can get away with a deposit of €12,500. So that means that the deposit requirement has gone down from about 11.2% of the purchase price to about 5%.
And I should mention, and I should have at the start, it's not just John McCarthy, it's Dr. John McCarthy, economist and Director of Research with Savills. So your head is very much so always in these numbers. John, the thing about this is, essentially, it's great news if you're that first-time buyer. It's easier to get your deposit together. But what has happened today is a relaxation of credit rules, not anything on the supply side. So will supply now follow these two measures? Will building firms, will the Construction Industry Federation look at what has happened at the end of 2016 and go, let's build more next year than we did last?
I think so, Chris. I mean, the arithmetic around construction development is pretty simple. If you can build houses and sell them for more than the cost of construction and get a 10 to 15% profit margin in the process, then the green light goes on and you go ahead and do it. And at the moment, the problem I think that a lot of developers have faced in particular locations is that the selling price hasn't enabled them to cover the costs of building and to get the type of profit margin that they need to compensate them for the risk and complexity of what they're doing with their money. So I think, I think this will drive up prices in the short run, at least. But the positive side of that, I think there are a number of positives. Firstly, in due course, that should cause the budgetary arithmetic or the break-even arithmetic around development to go into positive territory and allow developers to build. And in due course, if you get more supply coming on stream, eventually that will dampen the rate of price growth.
And there is something important that you said in your first answer as well, which I left out, which is a new home, because that's how the budget tax back, that only applies to new homes, not to second-hand homes. Now, you said in the short term you think prices will go up. How long is the short term?
Well, I think what we're likely to see is over the next 12 months we will see prices rising, because although today's announcement, actually this is only a sort of a minor tweaking of these mortgage rules, but when you combine it with the Help to Buy, as we said at the outset, it is pretty significant. And of course we have to remember that some banks are offering cashback deals which make life easier for first-time buyers as well. So I think we're going to see more competition from these first-time buyers, and that's going to drive prices. And I think in Dublin, I think when I was last on the show with you, I said 8 to 10% price growth in Dublin next year, and I think we're certainly probably looking towards the upper end of that range now. But I think there are some positives as well. For the last 18 months or 2 years, a lot of people who would have liked to have bought houses as first-time buyers have been driven into the private rented sector, and that's driving up rents. So we've had a displacement of inflationary pressure from the owner-occupier market to the rental market, and that's caused real problems. And hopefully this will allow those people to go back in and do what they always wanted to do and buy properties. And I think the beneficiaries of that will be people who are trying to rent, and some of them are in real genuine hardship, and I think it'll make life slightly easier there. And following the logical thread, in due course, and what I'm talking about is over a 12 or 18 month period, I think when we see softer rental growth, I think investors will become less interested in buying residential properties because the yields won't be as attractive, and that should, I think, offset the competition that's coming from the first-time buyers. In other words, there'll be less competition from developers, which should dampen house price growth at that point.
I'm a renter, John, and what I take from your answers is that at the moment everything has been up and there's still a little higher to go, but the seeds of the way out have now been sown.
I think that is the case.
The other thing I wanted to talk to you about was, am I safe? Okay, so, whatever, you're in a relationship, you're a couple, and you decide, look, let's do it, let's buy a house, we can do it right now. And the governor was talking about this just at the press conference an hour ago. He was saying, what are these rules about? These are about that if the same happens again, if the economy goes off a cliff, if tens of thousands of people lose their jobs, that you have not overextended yourself. You have still as a household borrowed 3.5 times your salary. You've still as a household just borrowed, apologies about that, a little bit more than your 3.5 times your salary. So you will be able to ride out another downturn. That's what these rules are about. Do you see that that's the case?
Well, I think it probably is the case. I think it's critical that the loan-to-income ratio was left in place. I think that's a critical part of it. So people, if they were caught on the loan-to-value restrictions, they're now given that little bit of flexibility as first-time buyers to pay a little bit more and to borrow a little bit more. But critically, there is still a limit on that. They haven't got carte blanche to go borrowing themselves up to the hilt. They still are restricted by the fact that they can't go more than 3.5 times their combined household gross income.
The governor also claimed that there is evidence that this has worked, that house prices would actually be higher now had we not got these sets of rules, that actually there would be a credit splurge again.
I'm unsure. Far be it from me to call the governor of the central bank, but my view has always been that certainly the mortgage restrictions caused a temporary slowdown in the rate of house price growth. But of course, that diverted people from owner occupation to renting. That led to higher rents. It took a while for it to happen, but investors started recognising that rents were really attractive and that rental yields were really attractive. They piled in and started competing to buy the properties, and that has begun to drive house price inflation again. So I would only see it as having caused a pause. In fact, if you look at house price inflation in Dublin today, it's 5.4%. This time last year, it was 2.2%. So there's been a big increase in the rate of house price inflation. I think they only achieved a temporary slowdown, but that probably is not their fundamental purpose. Their fundamental purpose is to protect the integrity of the banking system.
Okay, well look, Dr. John McCartney, economist and Director of Research with Savills Ireland, thank you for coming in to us to discuss this just as it came out. Another point the Governor made was if they see credit surge ahead, that it will be a big red flag to the central bank and they will look at these deposit ratios again. Our business editor Vincent Wall has been speaking to Philip Lane, Governor Lane, and we'll bring you that interview at 5 o'clock. We will bring that to you. The question, Sarah, now is, do we build more houses next year? Because for renters, for first-time buyers, for everyone, that's what we need. So does the construction industry now go, OK, let's build?
Yeah, well, what else does it need at this point? You know,
but they didn't get the VAT. That's what they really wanted from the budget.
They didn't, but they got their Help to Buy scheme, and they've now got first-time buyers who are in a much, much better position to buy, really. And they're the key group for the new homes, obviously, for builders. So you would hope that at this point they would just start building again. And if they do, hopefully everything will start to unwind a little bit, as John has just been has been describing for us here. But I suppose I'd be interested to know, Chris, what our listeners think about this. Is this going to help the people who are always in touch with our show when this issue comes up? Are they now going to be able to buy a home, get out of renting? Let us know on 53106, or you can tweet us on @NewsTalkDrive.
Yeah, is it time to take the plunge? Would you take the plunge based on what we now know 2016 has delivered? €250,000 new home. In September last, you would have needed 28 grand as a deposit. Next January, the deposit will be 12,500. Will that be the difference for you? Will you take the plunge? 53106 or @NewsTalkDrive. Back in a moment.
News Talk Drive with the Mitsubishi Outlander. Choose a tech pack for your